Netflix stock is crashing, and if you are wondering if now's a good time to buy, I'm going to break it down for you. Let's get into it. All right, so anyone who is looking to buy Netflix stock, or maybe you already own Netflix stock and you might want to add some more, I'm going to break down exactly what's going on and if now's a good time to buy. So for all the investors, get ready. If you can, please give a like and subscribe. It does a lot for my channel. So let's break this down. Netflix is down 7% today. Yesterday, they released their earnings and after hours, and it wasn't crazy bad or anything, but it wasn't great. It's not like a semiconductor, right? It's not a chip company. It's not MU, which is, revenues are going up 80%. It's not that, so people are just less excited. But it went down 7%. Now it's at about $69. So the EPS of 80 cents beat by 1 cent, not much. The revenue of 12.5 billion missed by about 20 million. So not a big miss. They narrowed their forecasted revenue range to about 51 to 51.4 billion, which represents 13 to 14% growth. So not that bad, right? I give it a B. Now this is their income statement. As you can see, the revenues went up 15%. Right? But this is the cost of revenue. So let's see. The cost of revenue went up 13%. So I do like how the revenue went up faster than the cost of revenue. That's good. But these other expenses they were growing a lot more than the revenue, right? So what are these? We got the sales and marketing, technology and development, and general and administrative. So these are all expenses that went up a little too much for what I would like. But in the end, right, operating income was 14% up. So I will take that. That was okay. But their net income and their EPS went up by 44% and 46%, right? So they're still making all kinds of money. They're still making profits. They're still making money. Now, I want you to keep this in mind. They grew revenue at 15%, but their net income at 44%. Keep this number in mind. It's going to be very important. So is Netflix stock a buy? Let's go over exactly if it is. Well, Seeking Alpha analysts believe it is, right? You got buy, strong buy, strong buy, sell, buy. Now this sell was yesterday after the earnings. So this was all, let me see. The sell is the one from the earnings, and everything after that is after the earnings. These were right before the earnings, right? Still, most people believe it is a buy. Netflix, if you don't know what it is, which you probably do if you're watching this, right? Dominant market leadership. They are the king of streaming from ads, right? Now they have the ads and the no ad tier and all that stuff, right? They're still expanding the operating margin and free cash flow growth. They have proven ability to create much-watched global hits, right? They create some really big hits that people have to watch, right? And then you also have capital returns to shareholders. They are buying back some shares. And then the future growth catalyst from gaming, live events, and sports, that's my wheelhouse. I work at Fox Sports. And then also podcasts. So Netflix is just huge in terms of what they provide for people. Now, they are the biggest global streaming platform, right? No one comes close. They have Joy Hotstar, which is an Asian, I believe, or an Indian a streaming platform, but when you look at the American, the worldwide Netflix just dominates, right? Then you have Amazon, Disney, HBO, all these other people, right? Netflix just dominates. They dominate. They're the number one. Now, here's also something that's very important. People generally refuse to cancel high utility services that offer significant convenience, like Amazon Prime and streaming platforms like Netflix and Spotify, right? Streaming services like Netflix and Spotify, despite the rising costs, these are often considered core entertainment. Though some users on Reddit argue there's like some free alternatives. When you think about what is a premium entertainment service, you're looking at Netflix, you're looking at Amazon, you do look at maybe an HBO and these things, right? But Netflix is one of the top tier out there. Then we also have, as you can see, they are raising their price not every year, but every couple of years they're raising their price. It is continuing to go up and go up and go up, right? That's just going to continue to happen. They're going to continue to raise their price, and guess what? People will pay, no matter what. And again, Netflix at about 300 million, top the top dog, right? They completely beat everybody. They also did not get Warner Brothers. That was a big deal. And they also got paid $2.8 billion to terminate the deal. They got paid $2.8 billion to terminate the deal. Now that went into the first quarter, so that wasn't even in the second quarter, but still, they got paid $2.8 billion to terminate that deal. They know what they're doing. Now this is their revenues. You can see the revenues continuing to go up. It's estimated to still go up, right? Now, how fast it's going up, obviously has slowed down a little bit, because in 2016, Netflix was not nearly as big as it is today, right? 10 years from now, like that, or 10 years ago, Netflix was nothing near where it is today. 10 years before that, it was nothing near where it was in 2016. So maybe in 10 years, it will be the same. We'll almost, half the planet will I don't know. Maybe 1 billion people will be on Netflix or something. Regardless, they're continuing to raise the revenue, and even though it's not at the same pace as it was about 8 to 10 years ago in the 30% range, they're in the mid-teens, 15, 14, 13% range, which is good. Now, does that actually equal to stock price? Like, what's that going to do to the stock price, right? Well, I'm going to go over that in a second. First, I want to show you where the stock is today. You could have bought this stock back here in November of 2021. In November of 2021, you could have bought the stock at the same price as it is today. That's almost 5 years, right? 4.5, 5 years. So that's good, right? You're buying a stock that people bought a while ago and are looking at no gains, right? Now, if we take a bigger view back, from the last about 15 years, I only found 4 instances where it crashed this much, right? We are down 48, Netflix is down 48% in 380 days. So last time it was 75% in 180 days in 2022. That was bad. 44% in 180 days, right? That was right before COVID and everything. Right? COVID happened, but that didn't affect it at all, right? It went down and then it just shot right back up. So this was right before. This was in the middle of 2018. It went down 44% in 188 days. And then back here, what is this? 2011, mid-2011, July, it went down 78% in 140 days. Now, back here in 2011, it went from about, let's say, $5 down to $2 to $1.50. Something incredibly low. Now, granted, if you had bought that for that, it took years. It took many years for that to recover. But would you have bought that at the peak? Right? You would buy this at the peak. Netflix at the peak at $5. You're looking at now, you're like, oh my God, that's 12x my money, 13x my money. That's amazing. Well, we're not even at the peak, right? 140 was the peak. Right now we're down here. I feel comfortable buying down here, and one of the biggest reasons is the math. Math doesn't lie. Numbers don't lie. Now remember what I said about the revenue growth. Keep that in mind. I have in these numbers that they're only growing revenue at 10%. Remember, they grew it at 15, right? So 15, 14. Revenue growth, I have it growing at 10%. Now the net income growth was at 44%. I'm growing it at 20%. So these numbers are hyper conservative. I know it says a bull case. This is not a bull case. This is almost a base to a bear case, right? 10% revenue growth, and they're only growing their net income at 20%. Now, if they're only growing their net income at 20% and their EP and the PE is between 20 and 30, this is what the stock price should be at this given year. So in 2026, it should be anywhere between 73 and 109. That's basically where it is right now, right? Where it's kind of been bouncing around a lot. Well, where's it going to go from here? Well, it could go from 88 to 131, 105. And I think by 2030, over the next 4 years, it will over double. I think it will over double, and you are getting a compounded annual growth rate of 22 to 35%, which is amazing, especially when you talk about a stock that isn't very volatile. Even though it has gone down significantly recently and gone down significantly in the past, it doesn't bounce a lot. It doesn't do this. Once Netflix turns around, it will be turned around. It's not going to just crash again. That being said, could it crash more? Of course. Of course it could. I just started a position today. And I'm going to continue to add on it because I don't think it's just going to pop back all the way up. It could continue to go down, right? It's gone down 75% and 78% before. So there's no one or nothing to say that it can't go down further. But I'm okay with starting my position now. And if it goes down further, I'll continue to build that position. If it starts to go up at any point here in the next time, I'll continue to buy up to a certain point. And then if I feel like, okay, the growth is not going to be there as much as I wanted it to be, then I'll stop buying and I'll have my position. But the point is, I do believe now is a good time to buy. So thank you for watching. Please give a like and subscribe. I really do appreciate it. My channel appreciates it. Yeah, I do believe Netflix is a buy. I mean, how is it not a buy? You know of Netflix. If you're watching this, you know what Netflix is. You probably have Netflix. It's one of those top dogs. You know, you hear about the Magnificent Seven. FANG used to be Facebook, Alphabet, which was Google, Facebook, Alphabet, Apple, Google, and Netflix. Hold on. Anyway, FANG had Netflix in there, right? Facebook, Apple, Amazon, Netflix, Google. There we go. And so Netflix used to be in the top dog, talk, right? But now with all the semiconductors, you got NVIDIA, you got Google, you got AMD, you got these big, these big companies coming up and making, big moves, and the market cap is so high. So now they're not really talked about anymore. But Netflix is still a very big company and top dog and top tier, top notch company. They run their business very well. They know what they're doing. And I think live sporting events is going to be big for them. I think as long as they do it correctly. And yeah, so I do believe Netflix is a buy, and I put my money where my mouth is. I am buying Netflix right now. I buy slowly but surely, so I'm not saying, oh, just throw in all your money. No, if you're going to buy, I always suggest doing by increments. That way, if the stock goes down any further from here, you don't feel bad. If it goes up a little bit, you might be like, oh man, maybe I should have. No, because if you do this for every stock, you will have many that go down after your initial investment. It's about a half and half, 50-50. So maybe Netflix goes up from here and doesn't look back. Or maybe it doesn't. Maybe it goes down more. Because you don't know, don't take that elevated risk. Limit your risk and just buy consistently. So anyway, that's my take on Netflix. I do believe it is a buy. Don't forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.